Welcome to another episode of Limitless Trading. We want to let you know where we see now that the tariff announcement is in, market's reaction. Where do we go from here? We had said on a previous video that if this divergence trend line defended on the 31st, that we were going to start coming in green into April. The market was going to play chicken with Trump and his tariffs. And we caught a great short at 58.46. 57.75 broke down. We caught that short and we said, before we start shorting down here, which you could short any break or rejection, but we wanted to see a retest of the trend line that broke down, which was 57.75. So if you were patient with us and you waited for the squeeze that was coming and then took your short at the close, because there's no such thing as bullish tariffs in the history of the country. As a matter of fact, the last time a president tried tariffs, we got the Great Depression. But that's a conversation for another video. We now have a gap down. And as we have said before, two things. Every reaction is an overreaction, and there are no gaps on futures. The gap up will eventually fill and the imbalance will get recovered. So what do you want to do? What do we do now? Do you just buy the dip? Do you wait? I always say wait for a reaction, because we can still continue to go down. The market will just say, okay, we profited here. Let's, take our losses, or the market will start covering. Now, what we want to see on the smaller time frame is at least 55.15 recover. If not, we're going to go down to about 50, if not 5,400, which is a pretty good number. We're going to see the 5,200 area and see new lows. But what you want to do is, if you were short, put your stop loss, because we could fling back on an overreaction. First step is let a level recover. The market is finding a little bit of support. It actually hit 54.80, which is a new low. You want it to recover a level. So let's say 55.15 recovers, starts basing out. Then 55.31, which was the prior support that we caught the bullish divergence, and then the market's going to crawl up very, very cautiously, right? These type of reactions are overreactions, and then we're going to get a counter short squeeze on this, but the market's going to go up very, very slowly, because there's going to be now a lot of violence, a lot of volatility. There's going to be a lot of fear in the market, so the market's going to crawl her way up. First level you want to see is 55.15 defend, 55.31 reclaim. And then ultimately, we want to get back into 55.78, 56.29, the same ones that we've been talking before, and then walk our way up, right? The market, again, now has reacted. Like I said, is way overreaction on this, the tariffs talks. And now we know two things. History repeats, and actually rhymes a lot. The last time there was tariffs, we got the Great Depression. The last time we had a drawdown of more than 4% in the first quarter was COVID, and it ended up being a bear market by Q4. So again, history may not repeat, but it surely does rhyme often. But when it comes to levels, don't short tomorrow on oversold again, because we're more likely, again, the market's going to recover, base out, and move on. So if the micro level starts recovering 515, 531 on this bullish divergence, and then we break out the 55.78 and especially 56.29 by the end of April, we're just going to keep on moving. As a matter of fact, I suspect we're going to cover a lot of this by, what is this, the 10th, which is right before CPI. And then let's see if we roll over on CPI, and then CPI being hot will be used as an excuse to sell the news and then roll over into tax day. There's no such thing as a bullish tax day, but one level at a time. Let a level recover, defend, base out, and then take your long. Don't just start taking longs because, I see a green candle, red candle on an uptrend. As a matter of fact, trend broke, right? We had a 3-day uptrend. Now it completely broke. Or if you want to short, let at least a back test of 55.78 occur, right? Which was the sort of breaking level. And then if you say, hey, you know what, I think it's not going to hold, then, do a continued short, but be cautious, because I always tell people, you're shorting on fear and you're shorting oversold. We're more likely to get greed and overbought and trapping all of these bears, because all of these bulls are going to want out. This entire move are market makers, right? Market makers are the only ones that can create divergences, and they're up here at 57.75. Now the ones that were stuck from Thursday are out, but you still have plenty of market makers that are stuck. You see this jumbo right here from the Trump run? All of these guys want to at least cut their losses at around 5,900. Most of them will probably want to get out. But again, we know that we have dark pool at the 6,500 level, and we have dark pools all the way down back to the COVID lows, 5,600. So don't assume. Let the level be your friend. Let the trend lines tell you where we're headed and where we're going. We're on the low. So the short was where we had said right at the trend line, 57.75. You close your short. Now you watch for a base of a recovery to go long and counter trend. When everybody's shorting the bottom, you want to be taking the 80% probability that we'll recover most of this, if not all of this, by CPI, but one level at a time. Recover 55.31, which was a key level for us. Recover 55.78 shows confidence, and then back off to one level at a time to keep walking up our flight of stairs. If you want more information or you want more guidance, please email us, subscribe or comment Discord below. We'd love to have you on our team.